Welcome back. You're watching Trade of the Weekend. Today we unpack Astral, Oceana, Pan-African Resources and Supergroup. Thank you so much for your time, Loyiso. Quite a interesting mix of stocks today. We're going into chicken, we're going into fishing, and then gold and transport and logistics. But of course, as we always do, just give us a bird's overview of how these stocks have performed against the broader market.
Yeah, okay, so I'm looking at it from a daily perspective, starting from last year, January to date, and quite an interesting mixed bag of performance. What we do have is a clear outperformance by Pan-African Resources in green, which is up 56% over this time period. But as you can see, it hasn't been a straight line. It's been quite volatile. The next best performer has been Oceana Group, which has been fairly consistent over this time period, holding above the 0% return and returning 11% over this time period. And then it's followed by Supergroup, which is down 3%, also quite volatile. And we can see for a large part of this period, it actually was at some point even up in excess of 30%. But we can see from late last year down significantly, and over this period now down 3%. And the worst performer by far has been Astral, down 12%. And we can see Astral in blue more often than not has been below the zero line. And over this time period, the all-share index has been down 2%. And when we run regressions, just to get a sense in terms of volatility and correlation, again, these results are very sensitive to the time period you're looking at, as well as the data, whether weekly, monthly, or daily. So looking at the daily, no surprise that Pan-African Resources has the highest beta coefficient, being a commodity stock at 0.85, and Supergroup at 0.7, and the other two much, much lower. But most importantly, from a return correlation perspective, all four have a very, very low correlation to the broader market. So very good for diversification.
Yeah. You know what's actually quite interesting? So in terms of Pan-African Resources, I'm not surprised that it is the clear outperformer there, because of course we have seen investors plowing into gold and these gold stocks because of the kind of headwinds that we are seeing in the macro environment. So investors really trying to go for a safe haven there. I'm also not surprised by Astral, because we know the heavy headwinds that the chicken industry has experienced in the last few years, in fact. What is quite interesting is Supergroup, because as you mentioned, even shows in the chart that Supergroup was quite a favorite, quite an investor favorite at some point. So it's quite interesting now to see the different challenges and the macroeconomic challenges that have caught up with the company at this point. And also Oceana, because Oceana also being the second outperformer there, because fishing is seen as a rather risky business. Yeah. So it's also just quite interesting, as you sift through even the most recent trading update and results, that things are going well in the US operations and the like. So let's actually go into the technicals of the different counters over here. Let's actually start off with the technicals of Astral.
So Astral is quite an interesting one, and you really need to look at the bigger picture here. So going back to April 2018, when the stock made an all-time high, you can see it had a very, very strong sell-off to November 2020. Now the question is, this bottom at around 110 Rand 79 cents, is this the bottom? So when I apply the wave count to this decline, I have a textbook 5-wave decline for wave A, a strong recovery for wave B, and another sell-off for wave C. And this entire pattern, this A, B, C, is a textbook zigzag, which would imply that a bottom is potentially in. Now, how am I looking at this advance from November 2020? It hasn't been as aggressive, but yeah, I'm looking at it as this 5-wave advance in a leading diagonal for a higher degree wave 1, and I'm looking at this current pullback for wave 2. But what's critical for this bullish outlook to remain valid is for the price to hold above this level just above 110 Rand. So from a buying perspective, what key level am I looking in the short term to give us some conviction that the bulls have taken over again? And I would say it's a break above this previous high here, which is around 175 Rand per share. So the key levels to watch is 175 and 110. But I think also when you look at the challenging performance that the company had last year, they've weathered that storm with the avian flu. I think for the first time in their 20-year history, they had a negative earnings year. But you can see that the bear market started in 2018. So whatever operational pressures that they had, whether it's low margins, rise in feed cost and other input costs into the business, they could still be there. But last year was definitely their worst year in their history. And looking at the chart, it's actually been quite a resilient performance over the last year in context of how bad things were last year, which bodes well should we see an improvement in production volumes and maybe regulation or a reduction in those input costs. So I think there's reason to be a bit optimistic when it comes to Astral in the short to medium term.
Well, it's going to be quite fascinating also to see, because as you're saying, we are seeing a little bit of bullishness coming back into the stock. And also this comes at a time when rainbow chicken is being unbundled by RCL Foods. So yeah, it's going to be quite interesting to see also the appetite that investors have for rainbow chicken as it prepares for its IPO.
Yeah.
Let's go into still food, but fishing, not chicken this time. Oceana. What are you seeing there?
Very interesting one here. Typical textbook outlook that I have. So again, just brought a picture. Had this all-time high in 2016, a 4-year bear market from March 2016 to March 2020, bottoming at 41.48, a bit of a subdued recovery, and then another sell-off to 43 Rand. But there's a textbook reversal pattern which I'm seeing here, which is a double bottom. Now, the deep detail of the double bottom we will touch later when we do the educational segment. But what's key here is you can see this bottom at 41.48 and this one at 43 Rand, almost at the same level. And what we have here is quite a strong overhead resistance, which is also now the neckline. And what's important to note is the neckline itself is not a singular price point, but it's a price range where you can see that price once challenged this price target, and then here with another retest, a pullback, and now the stock looks to be pushing up a bit. So the key here is if this does play out, what will the price targets be? So using the double bottom price projection from this low to the neckline and projecting it from this neckline, should it break out, could see the stock rally to about 116 Rand. So again, from a fundamental perspective, it was a bit of a mixed bag, the latest update. The US part of the business doing very well, record high fish oil prices. But South Africa, again, I think they've weathered quite a turbulent period. I know they had 2 of their processing plants which they shut down for upgrades. So from a production volume perspective, it was a bit low, and that's coming back online soon. And there's a new production plant as well, which is now in full production. So I think there's reason to be optimistic as well in terms of volume coming back into the business. And while the US continues to do very well.
Yeah.
So I think from a fundamental perspective, there's more reason to be optimistic than to be pessimistic on Oceana. But looking at the double bottom, it also gives bullishness from a technical perspective.
All right. What was also quite something to note on those results, I mean, just from last year compared to this year, is the Lucky Star sales. They did very, very well last year, but then this year not really doing that great. But I guess also keeping in mind that that did come from a higher base. So it's going to be quite interesting to see how consumers also, navigate, that kind of, selling and buying of Lucky Star in this kind of constrained environment. Let's go into gold. Pan-African Resources also recently released results. It was a month or a month and a half ago in February, actually. What are you seeing there? Because we know the bullishness that gold has had.
Yeah, so I'm looking at Pan-African as a momentum play. So the stock has run. The question is, can it continue to run further? So that is what momentum strategy looks to extract. But again, just going back to typical technical patterns that I spotted in Pan-African. So we looked at a double bottom in the previous stock. What I'm seeing here is a triple bottom. So instead of having two bottoms, we now have three bottoms. So we can see here we had this bottom at 295, this one at 283, and this one at 285. So all almost at the same level. Very strong support here. And one can also argue that this is also a rounding bottom. But what's important is the stock broke out. So this breakout is what we were looking for in the previous stock. On this one, it's happened. Here's the neckline. Very strong resistance zone here, clearly broken to the upside. And the question is, what is the price forecast? So again, projecting from this bottom to the neckline to the breakout of the neckline, I'm projecting that the stock could run to about 680, 690, which will then make for new all-time highs. So again, the stock is already running, but the question is there still room for more upside? And looking at this projection from a triple bottom perspective, it says yes. So if you do like what you see on Pan-African, you can either buy now and hold until that profit target is hit, or you can buy the dips. Though I must say, historically, when the stock does run, it does tend to give very, very small dips. So if you want to try and time it from that perspective, it might prove to be a very, very big challenge. But I am forecasting Pan-Africa to rally close to that 7 Rand price target, which will then take it to new all-time highs.
Yeah, indeed, the environment very, very supportive of gold and these counters there. Let's go into transport and logistics super group. As I mentioned, it was an investor favorite at some point last year, but we have seen quite a heavy pullback on that stock recently. Talk to us about that.
Yeah, so quite an interesting one here. And going back to April 2020, we can see it had a very strong run to September 2021, and since then it has been trading sideways in this fairly large range between 24.43 and 37.25. Now what's interesting with this price pattern is you can see here we have very strong support, here we have very strong resistance, and I'm looking at it from a twofold perspective. The first one is from an LA12 perspective, and I'm looking at it as a potential A, B, C flat pattern, which would then imply that at this low, or it can even push a bit lower, I'll be looking at a resumption of the bull trend. The worst case scenario is what we have here is a double top. So we've touched on double bottom. Now we have a double top scenario here where at the peaks are almost at the same level. And what that would imply is if we do have a double top play out, and again using that same forecast measurement from the top to the neckline, from the neckline down, could take the stock down back to around 12 Rand, almost at this level. So a bit on the fence when it comes to super group. Best thing to do is look what price action does at this support zone here. If we do get a high volume thrust up, that could be an early indication that the bulls are taking over. But if we get a strong high volume break to the downside, then we could have a much stronger sell-off. So a bit on the tentative side when it comes to super group. And I think also when you look at it from a fundamentals perspective, based on the latest results, there's been quite a mixed bag of performance across its geographies, especially the UK part of the business, which is still facing headwinds from very high interest rates. even the South African business has been doing well, but not really blowing the lights out. So it was quite a mixed bag of performance across the geographies there.
And usually with this kind of counter, you count on the rand hedge benefits because you expect their business outside of South Africa to actually do better. So it does raise a bit of concern that those businesses have been experiencing those kinds of headwinds that they have, to the point where they're putting pressure on the profits of the business as well. Well, let's get to the educational segment. When we were looking at that Oceana graph, we saw a double bottom there. Just go deeper into that for us.
So when you talk about double bottoms, so when it comes to technical analysis, there's two schools of thoughts. There's the subjective school of thought, and then there's the objective school of thought. From the objective perspective, it's about having concrete rules and guidelines to remove the subjectivity away from it. So from a quantitative perspective, when we build algos for pattern recognition, we look at certain criteria to qualify the pattern. So from a double bottom perspective, there's 4 criteria. First criteria is there has to be a clear downtrend, which we have here. And the next criteria is there has to be balance. So what this means is the 2 bottoms should be at or close price levels, ideally not greater than 10% in terms of the price difference between the 2 bottoms. So that is a very, very significant rule. The next criteria is from the low of the left bottom, there has to be a price increase of at least 10% to qualify as a double bottom. And lastly, there has to be a strong penetration above the neckline. But again, like I emphasized, in this instance, we can see that the neckline itself is not a singular price point, but it's a price range. So that is the 4 criteria for a double bottom. But what's also important to mention is there's no rule, but we can use guidelines in terms of the time taken between the 2 lows, as this now becomes dependent on the time frame that you're looking at. So in this instance, we're looking at the weekly chart. But if you're looking at it from a daily chart or an intraday perspective, that time then becomes dependent on the time frame that you're looking at. So therefore, it's not a rule, but you can use it as a guideline. Another guideline is after this right bottom has been formed, how much time should it take before the stock breaks out of this neckline? That's also something that you can never really put a rule on, because if there's one thing we've learned from the market can take its time.
Yeah, indeed. Well, thank you so much for that. I really, really appreciate that educational segment, Loyiso. That was Unum Capital's Loyiso Mpeta with this week's Trade of the Week.